Market Outlook. Calendar Week 28. The review of Calendar Week 27 does not show a classic schedule of events, but a condensed picture of market-relevant developments. The focus was on US economic data, labor market signals, ETF flows, credit stress in the United States, elevated AI valuations, and the geopolitical situation around the Iran conflict. Digital assets did not move in isolation. Yields, the US dollar, and liquidity remained decisive. The US data delivered a mixed picture. Parts of the economy continued to show resilience, while other signals pointed to slowing momentum. For the market, the key point was that the data did not fully ease the focus on a longer, restrictive rate path. At the same time, the US dollar remained firm enough to limit risk assets. One central topic was the debate around the AI sector. High valuations, strong capital inflows, and the question of real earnings increased sensitivity in technology stocks. This matters for digital assets because risk is often reduced first in the most liquid technology and growth segments. When capital becomes more cautious there, smaller and more volatile market segments lose follow-through flow more quickly. Possible credit stress in the United States remained a second issue. Higher financing costs, more cautious lending, and tension in parts of the banking and shadow banking system weigh on risk budgets. Even without an acute break, this environment leads to more defensive behavior. Less leverage, tighter liquidity, and thinner order books affect altcoins in particular. The Iran conflict remained an ongoing disruptive factor. The Strait of Hormuz, energy infrastructure, and transport costs stayed in focus. New headlines from the region first affect oil, gas, freight costs, and hedging costs. From there, they feed into risk assets through inflation expectations, interest rates, and the US dollar. ETF flows also remained important. They influence Bitcoin and the perception of institutional demand. In calendar week 27, this did not lead to broad rotation, but rather to selective stabilization in the larger assets. Bitcoin remained the central reference point. Ethereum showed relative strength, while many altcoins depended more strongly on short-term flow and derivatives positioning. The current situation can be framed with two markers. Bitcoin dominance stands at around 55.4%, while the crypto fear and greed index is at 23, placing it in extreme fear. Together, these markers show that the market is not broadly risk-seeking, but remains concentrated in liquid core segments. Quantum data analytics did not develop any research signals in this environment. The reason is purely operational. The regime was strongly event-driven, with fast reactions to macro data, credit stress, ETF flows, and geopolitical headlines. This increases the risk that models classify short-term event-driven moves as a stable market regime. For that reason, filter adjustment and retraining remained the priority. Without clear structure, confirmed liquidity, and a calmer event window, no activation took place. Looking ahead to calendar week 28, several concrete events are in focus. On Monday, the US ISM Services PMI takes center stage. It provides a signal on activity in the services sector. European retail sales are also relevant as an indicator of demand and consumption in the euro area. On Wednesday, the FOMC minutes follow. The market will focus on wording around inflation, the labor market, credit conditions, and the rate path. On Thursday, attention shifts to China. The Consumer Price Index provides signals on domestic activity, demand, and price pressure. On Friday, final German consumer prices and the Canadian labor market are on the agenda. In addition, token unlocks at L1X, WPay, and RAIN. Ongoing ETF flow data, as well as funding and open interest in Bitcoin and Ethereum remain relevant, especially in smaller projects. Unlocks can trigger local volatility in thin order books. The operational framework remains tied to these windows. Elevated volatility and slippage are concentrated mainly around the US services release on Monday, the FOMC minutes on Wednesday, the China CPI during the Asian session on Thursday, and the European and North American data windows on Friday. Additional headlines on the Iran conflict can overlap with these windows. For research signals, restraint remains in place. Activation only comes into consideration when structure, liquidity, and execution align. Bitcoin remains the leading structure. Altcoins remain selective and dependent on market breadth, order book depth, and flow. This report is for informational and research purposes only. It does not constitute investment advice and contains no recommendation to buy or sell. Quantum data analytics. Analytical. Strategic. Innovative.